Hello everyone, welcome to the Ichimoku daily report for the FX markets for Wednesday, April the 13th, 2011. Well, we'll begin with the Aussie dollar daily chart, and we can see here second last candle is the candle we're analysing. The final candle should be ignored. That's a candle that's still in progress. But we had a change of trend to the upside today. Previous 2 days we had the market trending down with red body candles. Found support around the 103.893 level, and today we have a green-bodied candle that's tested above the high of the previous candle. Green body denotes the buyers making net bullish progress on the day, and we have a shadow on the top of the candle representing a loss of commitment from the bulls as the market was trading up above the 105.40 area. The market has closed in between the midpoint level and the high, which means that the bulls have closed the market in control, and they've shown some commitment, although as we've said they did lose some commitment today. In Ichimoku charts terms, we're trading up above the cloud and a fair way up above, so positive buyers in big picture terms and bullish in the medium term and fast term time frames. Now the Kijun Sen has turned flat, and previously we had the price action attracted back towards there, these two red-bodied candles, and now we had that change of trend, so we might see the Kijun Sen begin to tick up. We do, however, have to watch this support area at 103.893 for any potential test down around that level. To the upside, we now have resistance up around 105.4, the high of the previous candle, and then certainly at this tweezer's top at 105.8. So some decent resistance up above if the market does continue rallying, but good support down below at 103.893. We also have potential support at the Tenkan Sen, which is at 104.346. So some good support below. Now onto the hourly charts for the Aussie dollar, US dollar, and disregard the final candle there. It's still trading at the moment. Second last candle we had a change of trend to the downside, and we've previously seen the cloud now holding as an area of support for this market. We had a breakout to the upside, market testing up above the previous resistance up around 105.23 and selling off, losing commitment up around those levels. Certainly the cloud here has held a support on 1, 2, 3, 4, 5, 6, 7, 8 occasions, so we would expect the market to test that area again and hold a support again. This area also coincides with the Kijun Sen, and we can see that the market touched very close to or just through the Kijun Sen, so this area of the cloud and the Kijun Sen is very important. Now we are still trading above the cloud, so we have an overall positive bias, and trading above the Kijun Sen, so we have a bullish market in the medium-term time frame, but we are trading down below the Tenkan Sen, which means that we're negative in the fast-term time frame. The market is trading between both of these indicators, so fairly mixed market in terms of medium-term and fast-term price action. Now, previously, a few hours ago, we did have the crossover of the Tenkan Sen above the Kijun Sen. That is a bullish signal with Ichimoku charts. It occurred just after the bullish breakout above the cloud, which is another bullish signal, and that occurred within the cloud, so it's a neutral signal. The stronger signals are those that occur above the cloud, but still could be quite a good signal if the market finds support down around these areas and bounces off and takes out the Tenkan Sen in a serious way and perhaps successfully tests above the 105.374 level. Then we could see the market trading up to around 105.8 up around these swing highs. Next on to the Euro US dollar FX daily chart, and we have a continuation of the trend to the upside. This current candle, ignore that final one there, that's still developing, but the second last candle here for the current daily trading has made a higher high and a higher low, but it has been on a spinning top type candle. Two spinning tops together and another indecisive candle prior to that, so a lot of indecision up around these levels. Wouldn't surprise to see the market come off, but we would like to see confirmation of a change of trend, so we'd be looking very closely at the low of the current candle at 144.129 for a potential lower high and lower low, so we do need to watch that area. Good support offered at the low of that previous candle from the previous day, 143.768, where we had buying coming in down around that level. But certainly good solid resistance up around the 145 level, and the previous two candles lost, the buyers lost commitment up around those levels. Now we are trading a fair way up above the cloud, so the market has an overall positive bias, and we're trading above the Kijun-sen and Tenkan-sen, which means we're bullish in the medium-term and fast-term timeframes, and the checkout span is confirming this price action. The Kijun-sen has turned flat, and that does warn of a possible retracement back towards lower levels. So we do need to watch the low of that current candle for a change of trend. And as we've said, these two spinning top candles denotes indecision, and it does increase the possibility of a change of trend. But we do need confirmation. The Tenkan-sen, however, is pointing up, and that's reflecting upside momentum in this market in the short-term time frame. So that is a positive for this market to the upside. If the market does come off, the first level that we could see the market find support is around the Tenkan-sen, which is trading at 144.3351. And that coincides with this green-bodied candle where the bulls did lose some commitment around that level. We have a swing high which could turn into support down around 142.45, and there was a minor swing high just above there as well. If those levels don't hold, then potentially the Kijun-sen could act as an area of support at 141.355. And although I don't think it'll be trading, the market will be trading down around those levels anytime soon. Now onto the hourly chart for the Euro US dollar, and we can see that we have the market now trading down below the cloud. So that's a bearish, a breakout to the downside, a bearish signal in Ichimoku charts terms. But what I like to see is a bearish breakout down below, and we like to see follow through, and we're certainly not getting that at the moment. We had the market test down below the cloud, and then we saw buying come in, and then some very, very indecisive candles with small bodies and large shadows. Certainly this spinning top type candle has a very long shadow on the bottom, representing a lack of commitment from the sellers. Certainly the candles that followed in the previous 4 hours of trading have been very, very indecisive candles. So certainly not the type of candles that you'd like to see on a breakout down below the cloud. Now, technically we do have a market with an overall negative bias because we're trading below the cloud, but we have a lot of indecisive trading down below there. We also have the market trading down below the Kijun-sen and Tenkan-sen, which means that we're bearish in the medium-term and fast-term timeframes. The checkout span is trading below the corresponding price action, and that's confirming this bearish activity that we're seeing down below the market. We do need to watch down here to lower levels. One of these swing lows around 144.33 could be important if we see the market become bearish and take out that level. We could see a test down to 144.133. And if we see further bearish activity, we've got support down to around 143.70 or 143.80 down around this swing low, and the market could test down to around those levels. And we do need to watch the Kijun-sen. That's turned flat, and that's why we've had a lot of this indecisive trading. We haven't seen the market extending further down below the cloud and down below the support areas that were set up with this swing low. So, and there is a possibility that the market could retrace back towards that Kijun-sen. However, we do have the resistance offered at the cloud, so that is very important, and the market will need some good upside momentum to test up above the cloud. We also have resistance offered now by the Kijun-sen and Tenkan-sen, which are at 144.618 and just above. Previously, we did have a bearish signal from the crossover of the Tenkan-sen below the Kijun-sen, and that occurred fairly recently, and it occurred above the cloud, which meant that it was not a very strong signal. It was only a weak signal, and we haven't seen follow through with the breakout down below the cloud. Okay, moving on to the dollar yen, US dollar Japanese yen FX, and today's trading we had a green bodied candle. We can see here, ignoring that last candle there, which is still developing. We've had the new trading day begin only a few hours ago, and the current candle failed to continue the series of lower highs and lower lows. We had a market that was making lower highs and lower lows, Previously, we had a very large red-bodied candle which tested support down around 83.45, and today the market tested to that level, failed to take out the low, but also failed to take out the high of the previous candle. So in bar chart terms, we have an inside day, and that's a day that denotes indecision in the market. So there is potential for a change of trend to the upside. Now, in candlestick terms, this is also a potential Japanese candlestick tweezers bottom, and we have the prior downtrend, and that's where we have the lows of these two candles roughly around the same area. So there is potential for a change of trend to the upside. Now, we do require confirmation of a change of trend, and that would be a candle with a higher high and a higher low. So the high of this current candle at 84.255 becomes very important for a potential test up to the resistance at 84.50. And we can see here where we had strong downside price rejection from that area, and that is an important area for this market, potentially strong resistance. To the downside, obviously, the support offered at this swing low now at 83.45 is very important. There is potential for the market to continue trading down. Now, looking at the cloud that the market will be interacting with over the next few days is only very thin. So it offers a minimal amount of support for the market, and that could be crucial to this market. However, the market is trading up above the cloud. We did have a bullish breakout up above, and the market tested higher levels, take out that important resistance level at 83.966 and 84.50. We are trading up above the Kijun-sen, so the market is bullish in the medium-term time frame. But we are now trading down below the Tenkan-sen, which means that we're bearish in the fast-term time frame. The Tenkan-sen has been pointing up fairly sharply, reflecting this very strong upside momentum that the market had, and it looks like we could be finding support down around. We've poked just through there the previous day's trading. Today we tested up above there, and it's actually held as resistance now, the area around the Tenkan-sen as well. So we could look for that area to hold as resistance again. Now that is trading up at that 84.50 level at the moment. So it is an area that becomes even more important for this market as a resistance level. Now, just looking at the hourly chart for the dollar yen, and we are trading down below the cloud, and we have been for some time on the hourly chart. And we could see we had the bearish breakout, which is a bearish signal in Ichimoku charts terms, and the market has gone on with this move and has been quite bearish for the last few days on these hourly charts. We could see that the market tested the cloud that has been holding as resistance on a few occasions, and we have sold off from that area. Obviously, we have very strong support down here at the 83.50 level. We've tested down around that level on quite a few occasions. We've seen solid buying coming in, so that is crucial to this market. Still bearish trading below the cloud, and also bearishness below the Kijun-sen and Tenkan-sen, which means that we're bearish in the medium-term time frame and fast-term time frame. We have had a crossover of the Tenkan-sen below the Kijun-sen, and that has occurred below the cloud. So that is a bearish signal, and a fairly strong bearish signal with Ichimoku charts. Combined with the fact that we're trading down below the cloud, does add weight to a possible bearish test down around the 83.50 level, and a possibility for us to trade down below that level. However, if we look at the Chica span, we are still trading up above the corresponding price action, and that's failing to confirm the bearishness that we're seeing in this longer term time frame. However, based on other probabilities, the market does look a little bit more bearish on these hourly charts, and a test down to 83.50 is probably most likely.